Welcome to our video on the top 10 reasons why cryptocurrencies are here to stay. In this video, we'll be discussing the key factors that make cryptocurrencies such an important and innovative part of the financial world. From decentralization and security to low fees and fast transactions, we'll explore the many benefits of using cryptocurrencies as a payment method, investment opportunity, and more. So sit back, relax, and get ready to learn why cryptocurrencies are not just a passing trend, but a truly revolutionary technology that's changing the way we think about money. Decentralization. One of the defining features of cryptocurrencies is that they are decentralized. This means that they are not controlled by any single entity, like a bank or government. Instead, transactions are validated and recorded on a decentralized digital ledger called a blockchain. This makes cryptocurrencies resistant to manipulation or censorship, as there is no central authority that can control or alter the transaction history. Decentralization also gives people greater control over their financial transactions. With cryptocurrencies, individuals can send and receive money directly, without the need for an intermediary like a bank. This can be especially valuable for people in countries with unstable financial systems, or who may not have access to traditional banking services. Additionally, decentralization can help to ensure that cryptocurrencies are more secure than traditional financial systems. Because there is no central point of control, it is much harder for hackers to gain access to sensitive financial information or steal funds. Overall, decentralization is a key factor in why cryptocurrencies are here to stay. It provides greater control and security for users, and ensures that cryptocurrencies can remain a viable alternative to traditional financial systems for years to come. Security. Cryptocurrencies use advanced cryptographic techniques to secure transactions, making them highly resistant to fraud and hacking. When a cryptocurrency transaction is initiated, it is validated and recorded on a decentralized digital ledger called a blockchain. This blockchain is secured using complex cryptographic algorithms, which make it nearly impossible for a hacker to manipulate the transaction history. This high level of security is one of the main reasons why cryptocurrencies are becoming increasingly popular for online transactions. Unlike traditional banking systems, which may be vulnerable to cyberattacks and hacking attempts, cryptocurrencies offer a high degree of protection for users' financial information. However, it's important to note that while cryptocurrencies are highly secure, they are not completely immune to fraud or theft. Users still need to take appropriate measures to protect their cryptocurrency holdings, such as using secure passwords and two-factor authentication. Overall, the security features of cryptocurrencies are a key reason why they are here to stay. Transparency. Cryptocurrencies use blockchain technology to record and validate transactions. This means that all transactions are visible to anyone on the network, providing a high level of transparency that is not available with traditional banking systems. This transparency is a significant advantage for users, as it helps to prevent fraudulent or illegitimate transactions. Because all transactions are recorded on the blockchain, it is much harder for scammers or criminals to hide their activities. This transparency is a significant advantage for users, as it helps to prevent fraudulent or illegitimate transactions. Because all transactions are recorded on the blockchain, it is much harder for scammers or criminals to hide their activities. In addition, the transparency of cryptocurrencies can help to reduce transaction costs and processing times. Because all transactions are visible to everyone on the network, there is no need for intermediaries like banks or payment processors. This can help to reduce transaction fees and make transactions faster and more efficient. Overall, the transparency of cryptocurrencies is a key reason why they are here to stay. By providing a high level of transparency and reducing the need for intermediaries, cryptocurrencies offer a more secure and efficient alternative to traditional banking systems. Global acceptance. Cryptocurrencies are becoming increasingly accepted and recognized around the world as a legitimate form of currency. This is in part due to the fact that cryptocurrencies can be used to facilitate international transactions quickly and easily. Because cryptocurrencies are decentralized, They can be used to send and receive funds across borders without the need for an intermediary like a bank or payment processor. This can be especially valuable for individuals and businesses who need to make international transactions, as it can help to reduce transaction fees and processing times. In addition, cryptocurrencies are increasingly being recognized by governments and financial institutions around the world. Some countries have even begun to develop their own digital currencies, or to explore the use of cryptocurrencies in their national financial systems. Overall, the global acceptance of cryptocurrencies is a key reason why they are here to stay. As more people around the world recognize the benefits of cryptocurrencies for international transactions, and as more governments and financial institutions embrace digital currencies, cryptocurrencies are likely to become an increasingly important part of the global financial landscape. The cost of transactions is minimal. One of the main benefits of using cryptocurrencies is that they offer low transaction cost compared to traditional banking systems. Because cryptocurrencies are decentralized, there is no need for intermediaries like banks or payment processors to facilitate transactions. This can help to reduce transaction cost and make transactions faster and more efficient. In addition, cryptocurrencies allow for micropayments, which are small transactions that are often impractical with traditional payment systems. For example, if you want to pay for an online article that costs just a few cents, you might not be able to do so using a credit card or bank transfer due to high transaction cost. However, with cryptocurrencies, you can make these types of small payments quickly and easily, often with no transaction cost at all. Overall, the low transaction cost offered by cryptocurrencies make them an attractive alternative to traditional banking systems. As more people around the world seek more efficient and cost-effective ways to make transactions, cryptocurrencies are likely to become an increasingly popular choice. Fast transactions. Traditional banking systems often require several days or even weeks to process transactions, especially for international payments. In contrast, cryptocurrencies can facilitate transactions in a matter of minutes or even seconds. Because cryptocurrencies are decentralized, transactions can be processed quickly without the need for intermediaries like banks or payment processors. This can be especially valuable for businesses or individuals who need to make time-sensitive payments, such as payroll or bill payments. In addition, the fast transaction speeds offered by cryptocurrencies can help to improve overall efficiency and productivity. By reducing the time and effort required to process transactions, businesses can focus more on their core operations and less on administrative tasks. Overall, the fast transaction speeds offered by cryptocurrencies are a significant advantage for users. As more people around the world seek faster and more efficient ways to make transactions, cryptocurrencies are likely to become an increasingly popular choice. Accessibility. One of the main benefits of cryptocurrencies is that they are accessible to anyone with an internet connection, regardless of their location or financial status. This is in contrast to traditional banking systems, which often require users to meet certain eligibility criteria, such as a minimum account balance or credit score. Cryptocurrencies can also be used by anyone, regardless of their age or background. This can be especially valuable for individuals who may not have access to traditional banking systems, or who may be excluded from financial services due to social or economic factors. In addition, cryptocurrencies can be easily transferred and stored using a variety of digital wallets and platforms. This makes it easy for users to manage their funds and make transactions quickly and efficiently. Overall, the accessibility of cryptocurrencies is a significant advantage for users, particularly those who may not have access to traditional banking systems. As more people around the world seek to participate in the global economy, cryptocurrencies are likely to become an increasingly important tool for financial inclusion and empowerment. Limited supply. One of the key features of many cryptocurrencies, such as Bitcoin, is that their supply is limited. This means that there is a finite amount of the currency that will ever be available, which can help to prevent inflation and protect the value of the currency over time. In contrast, traditional currencies like the US dollar are subject to inflationary pressures, as central banks can print more money to meet demand. This can lead to a decrease in the value of the currency over time, as more units of the currency are in circulation. Because cryptocurrencies have a limited supply, they can be seen as a more stable store of value compared to traditional currencies. This can be especially valuable for investors who are looking to diversify their portfolios and hedge against inflation. In addition, the limited supply of cryptocurrencies can also help to promote a sense of scarcity and exclusivity among users. This can make the currency more attractive to investors and users, potentially leading to an increase in demand and value over time. Overall, the limited supply of cryptocurrencies is a significant advantage that sets them apart from traditional currencies. As more people around the world seek to protect the value of their assets and investments, cryptocurrencies are likely to become an increasingly important part of the financial landscape. Investment potential. Cryptocurrencies have gained popularity in recent years as an alternative investment option. Many investors see cryptocurrencies as a way to diversify their portfolios and potentially earn significant returns on their investments. One of the main reasons why cryptocurrencies have investment potential is their volatility. Because the value of cryptocurrencies can fluctuate rapidly, investors can potentially earn significant profits if they buy at a low price and sell at a higher price. In addition, the limited supply of many cryptocurrencies can also contribute to their investment potential. As demand for the currency increases and the supply remains limited, the value of the currency may increase over time. Moreover, the decentralized nature of cryptocurrencies means that they are not subject to the same regulations and restrictions as traditional investments. This can make it easier for investors to buy, sell, and trade cryptocurrencies and potentially earn higher returns compared to traditional investments. Overall, the investment potential of cryptocurrencies is a significant advantage for investors looking to diversify their portfolios and potentially earn significant returns. While cryptocurrencies can be volatile and carry some risk, they also offer unique opportunities for investors to capitalize on emerging technologies and new financial markets. Innovation. Cryptocurrencies represent a major innovation in the world of finance and technology. By leveraging blockchain technology and other advanced cryptographic techniques, cryptocurrencies offer a new and innovative way to store, transfer, and exchange value. In addition, the development of cryptocurrencies has sparked a wave of innovation and experimentation in the broader financial industry. Many companies and startups are exploring ways to leverage cryptocurrencies and blockchain technology to create new products and services, such as decentralized exchanges, smart contracts, and more. Moreover, cryptocurrencies are also driving innovation in other industries, such as supply chain management, identity verification, and more. By enabling secure and transparent data sharing and transactions, cryptocurrencies have the potential to transform the way many industries operate. Overall, the innovation of cryptocurrencies is a significant advantage that sets them apart from traditional financial systems. As more companies and individuals explore the potential of cryptocurrencies and blockchain technology, we can expect to see a wave of new products, services, and business models emerge. And that's a wrap. We hope you enjoyed our video on the top 10 reasons why cryptocurrencies are here to stay. From the decentralized nature of cryptocurrencies to their investment potential and innovation in the financial industry, it's clear that cryptocurrencies are a game changer. Whether you're an experienced cryptocurrency user or just starting to learn about this exciting technology, we hope this video has given you a better understanding of why cryptocurrencies are such an important part of the financial landscape. Don't forget to like and subscribe for more videos like this. And as always, thanks for watching.